I wanted to ask you about the impact of AI. How has that changed the way you think about investments?
It's very sector specific, and we're not going to be uniform. Even within sectors, it's within subsectors. In certain companies, there will be value creation as a result of AI, and others there will be value destruction as a result of AI. So what we're really focused on now is making sure we have the right leadership team, making sure everybody has an AI strategy, and then we have the right leadership team to execute on that strategy with a sense of urgency. Because if you don't move quickly here to take advantage of whatever AI offers to your particular company or your industry, then other either incumbents or even worse, AI native players will be coming in to really disrupt your business. Probably the single most interesting AI opportunity we see today at EQT is in the AI infrastructure stack, and particularly in data centers and in the power grid. So we have a very big infrastructure business at EQT. We own over 90 data centers, and we're seeing just tremendous growth in that business. And although there's talk of an AI bubble and overinvestment, I just don't see that. I feel like the demand is very real, and there's a real supply constraint here on what's required to deliver the compute that AI is going to deliver for companies and for people around the world. The demand really exceeds the supply at the moment there. We have over $100 billion invested in energy assets around the world. And we continue to put more money into energy because we believe that energy is probably the single biggest constraint to the build out of AI globally. Lastly, I'd say as far as AI, we're very excited about the early stage investing strategy that we have at EQT for investing in AI native companies, whether it's the application layer or some of the AI models that we're finding in Europe, for example, or even in Asia on our buyout strategies. It's very helpful to have the ventures team sitting in those discussions, telling us where there's opportunity with AI, but also where there's risk coming at some of the more established businesses that we look at in our later stage strategies. So I think taking a very holistic view of what's happening both in the infrastructure, the energy, the early stage, the late stage, it really is a fundamental change that's happening. And I think it's really important that companies take a pause, investment companies like ours take a pause and really think about these things holistically.
Both the impact across your portfolios, but also the actual opportunity itself.
Yeah, it's both.
And in talking with your LPs, I assume that theme, the broader AI data center power themes, those are resonating well with the LPs as well.
I think so. I think there's also a lot of concern, justifiably so, about what this means to existing portfolios, what it means to the ability to underwrite the future outlook on certain types of assets. And I think also importantly, what does it mean for exit multiples in certain industries, like the software industry, for example, where there's a lot of questions around what's the long-term value of some of these businesses. So I think there's a lot of uncertainty at the same time, which is why we're kind of gravitating to parts of the market where we think there's a lot more predictability, like AI infrastructure, like the energy assets.
Hard Lessons is an original series from Morgan Stanley. For the full episode and an extended audio version, visit morganstanley.com/hardlessons.